Stablecoin adoption is being stifled by the European Union. Welcome to CryptoLink channel. If you love getting news and updates about cryptocurrency, join our community by subscribing to our channel. You can tap the bell icon to never miss our new videos. If you enjoy our channel, kindly like and share it with your friends. September 26, 2022. A tweet from Cointelegraph stated, "The EU territory still waits for policymakers to go ahead with stablecoins regulation while financial tech companies are evolving to the future." In the meantime, Circle just launched a euro-backed stable asset, EUROC. The market for virtual assets in the European Union or EU is changing as the markets in crypto assets or MiCA legislative framework, which attempts to provide regulatory certainty on crypto assets, is being passed. The MiCA's existing organizational structure, while well-intentioned, could stifle innovation. However, if a new version of this regulation is approved, it may help the European Union take the lead in the field of virtual payments. A real possibility of the continent lagging behind exists if this is not the case. The European Union's crypto asset market will be governed by MiCA's regulatory framework. Although there is still much that needs to be formalized and explained, the general principles are already understood. A stablecoin named Eurocoin or EUROC was simultaneously introduced by financial technology company Circle. The company's current USD coin, or USDC, and the Eurocoin both use the full reserve approach. With over $55 billion in circulation at the moment, this dependable virtual US dollar currency is accepted on both controlled and decentralized exchanges. In order to maintain stability, EUROC is 100% guaranteed by euros stored in bank accounts denominated in euros and is convertible 1:1 into euros. It may appear that these two pieces of news represent a step forward for cryptocurrencies in Europe, but things are not always as they seem. Stablecoin payments are only allowed to be made up to $200 million per day under the MiCA framework. This cap is too low to determine its effectiveness, and it ultimately serves solely to stifle innovation and limit the potential of these assets. Consider Belgium, where all businesses must have at least one virtual payment option by July 1, 2022. The hitch is that, under this clause, cryptocurrencies and stablecoins are not recognized as legitimate means of virtual payment. The restrictions of MiCA threaten to stifle the possibilities of EUROC and other virtual assets. And unless this obstacle is removed, it's possible that the European Union won't experience the kind of acceptance needed to drive global innovation in the cryptocurrency industry. Furthermore, there is a significant chance that the euro's status as a global reserve currency will be substantially weakened. This is a significant wasted chance for the European Union market to take the lead in innovative virtual asset development. The constraints imposed by the framework, which are far from the ostensibly innovation-friendly strategy envisaged by MiCA, may ultimately reduce the appeal of the European Union completely and drive top virtual currency enterprises outside of Europe. As an alternative, accepting and using EUROC and other stablecoins as an acceptable method of virtual settlement from a reputable issuer might provide a way to simplify the payment process, save expenses, and provide additional safety for customers. But if the legal transaction volume is arbitrarily kept at $200 million, adoption is probably also going to be constrained. Increasing the availability of euro stablecoins to virtual asset service providers, or VASPs, would also be a wonderful way to strengthen the sector and better secure consumers. In fact, in Europe, clients that utilize crypto custodians benefit from the fact that, in the case of bankruptcy, currency assets cannot be confiscated by creditors, but crypto assets cannot. Increased availability of euro stablecoins would result in a safer VASP market, as such are regarded as prepayments. In the end, the European Union's regulation of crypto assets is expected to benefit significantly from MiCA and be on the upswing. The proposals for a MiCA II framework made by Christine Lagarde, President of the European Central Bank, may have some merit, though, since it's crucial to maintain legislation that is both tech-neutral and conducive to innovation. She may have different ideas about what should be included than we do. Stablecoin volumes must be uncapped as part of this, and measures must be made for the European Union to acknowledge and promote the use of virtual currencies, notably stablecoins, as a means of payment. Any less will cause innovators and issuers to go elsewhere for more progressive countries. On the same date, September 26, 2022. According to a tweet from the block, banking giant Nomura invests in payments firm Nality. According to a statement released by Nality on Monday, the Japanese financial giant Nomura has invested in the London-based blockchain payments company. The financial services company will also become a member of Nality's Global Bank Consortium, which is working to develop a regulated peer-to-peer payments system based on virtual assets. Commerzbank, BNY Mellon, Nasdaq, ING, CIBC, Lloyds Banking Group, MUFG Bank, Banco Santander, Credit Suisse, Barclays, State Street Corporation, UBS, Mizuho Financial Group, Sumitomo Mitsui Banking Corporation, and KBC Group are just a few of the 16 major financial institutions that have already backed Nality. Nality was established in 2019 and was formerly known as Utility Settlement Coin or USC. Its goal was to build a network of wholesale blockchain-based payment services that were pegged in 5 different currencies: US dollars, euros, Canadian dollars, yen, and British pounds. The applicable central bank's holdings of fiat money would serve as the sole guarantee for the tokenized currencies. Reuters reported in September 2020 that the project has experienced difficulties in its application for regulatory clearance. Nality's efforts to raise money. Nomura did not reveal the specifics of its investment. Nality, on the other hand, stated that it intended to utilize the investment to increase its position in the capital markets of Europe, the United States, and Japan. According to a recent article from the block, Nality is looking to raise £50 million, $53 million, in a Series B investment, matching the amount it obtained in a Series A round when it first became a commercial entity in June 2019. The block was informed at the time by a representative for Nality International that after a successful Series A investment round, Nality is now raising money as a part of an ongoing Series B investment round. Complete information will be released when the round is over. The cryptocurrency pushed by Nomura. The announcement of Nomura's support coincides with the opening of a new cryptocurrency venture capital division within the investment bank's virtual assets division. The division, known as Laser Venture Capital, will make investments in blockchain infrastructure and DeFi startup companies. The first offering from Nomura's new Laser Digital division, which specializes in virtual assets, is Laser Venture Capital. 2 more launches are planned by the bank, one of which will be centered on investor offerings and the other on the secondary market. As chairman and CEO, respectively, Jez Mohadeen and Stephen Ashley will lead Nomura's Laser Digital cryptocurrency division. Ashley's prior position as the bank's head of its wholesale division has been replaced by his new position. In today's announcement, Angelisa, Nomura's global head of corporate development and strategic investments, remarked, "Blockchain technology is unmistakably speeding the transformation of financial services, and we think Nality is well positioned to take advantage of the huge potential this development has brought. We're excited to use Nality's technology and knowledge will continue providing unique value to our partners and clients throughout the world," he added. That's it for our today's video. So, what can you say about the news? Let us know about it in the comments section down below. Thanks for tuning in to CryptoLink. We are always excited to provide you with news and updates about cryptocurrency, and if you like this video, please click the like button. See you on the next one.